October 20th, 5:24 a.m. Central Time. Grain markets are mostly higher this morning. December corn futures up 1 at 423.5. November soybeans up 8 3/4 at 1028.25. December Chicago wheat up 1.5 at 505.25. December Kansas City wheat up 1.5 at 493. December spring wheat up 2 cents at 550.5. Mackenzie, quick note before we start here. There was a big outage at Amazon Web Services this morning, and like a huge chunk of the internet runs on Amazon Web Services. And it just so happens that a lot of the stuff we use to put together our graphics runs on Amazon Web Services. So guys, today our graphics are kind of unfinished and incomplete, and maybe we've got a few less of them than we normally would, but we'll be back to normal tomorrow. And of course the outage is over. It was only like during the hour and a half that I throw a lot of this stuff together early this morning. So most of you guys are unaffected, but we were affected. Anyways, let's go to our first story, which is ADM and their Decatur location.
So ADM is offering farmers the option to deliver soybeans to its Decatur, Illinois facility and determine the final sale price at a later date. The company will take immediate ownership of the soybeans and waive storage fees, ensuring uninterrupted processing operations. The offer is available to farmers through the end of this month, and participants have until September 2026 to set a final price. Weak soybean prices have led many farmers to postpone sales and store their crops in hopes of higher returns in the future, a situation that has slowed deliveries to processors.
Free DP is nothing new. It happens all the time. It very rarely, however, happens smack dab in the middle of harvest. Typically, you would see farmers, deliver what they can't store, deliver what they had priced at harvest or during harvest. Farmers have very few forward sales made of corn and soybeans this year because prices have been low all year. They've been below production cost all year. Matt Bennett tells me that in his neighborhood, which is not too far from Decatur, Illinois, a lot of beans are going into bags and into on-farm storage. Guys are just doing whatever they can do to not sell soybeans at these low prices. They're going to use this free DP program to keep themselves in the game, essentially. One of the things that's going on, there's a lot of issues with free DP. One of the things that's going on is that basis at Decatur is actually really good. They're 5 over the board, or they were on Friday, for soybeans for spot delivery, which is pretty damn good. I mean, Decatur's often associated with some pretty good basis relative to the rest of the country. But if you're a farmer and you get involved in this free DP deal, which they're going to do through September of 2026, which is crazy, they must really need the beans. But in any case, you give up ownership of the soybeans. ADM owns the beans once you do this free DP thing. And because of that, you lose any sort of power that you had to negotiate basis. Like if there's a basis push, you're not going to be privy to that. It's going to be whatever the posted bid is what you're going to be able to sell the beans at. I could see an issue here where, you put this stuff on free DP and maybe the board rallies, but maybe the basis just falls apart and you're left kind of holding the bag on some of this stuff. The strategy that would stick out to me in my head, this is not a recommendation, but the basis is good and the board sucks. Why not sell the cash and re-own on the board? And I hate re-ownership. I don't, when I was doing brokerage business, I don't very rarely advise re-ownership, but this could be one of those situations where it makes sense. But I think this just speaks to what's going on with the soybean market and has been going on for a couple of years now, is that the prices are just below production cost. The farmers don't want to sell. The farmers are optimistic about a rally, perhaps optimistic about some sort of government payment, or optimistic about a resolution to the trade war. But in any case, free DP at harvest, not totally normal stuff.
U.S.-China trade talks will resume this week. Treasury Secretary Scott Bessent and China's Vice Premier will meet in Malaysia later this week to discuss ongoing trade tensions. The meeting will also serve as preparation for a meeting between President Trump and President Xi Jinping later this month. The talks follow President Trump's recent threat to impose a 100% tariff on Chinese imports after Beijing announced new export controls on rare earth minerals. They come at a crucial time, with the current trade truce between the two nations set to expire in November.
I think the soybean market is higher this morning, partially because we've got a meeting, and also Trump was talking to reporters outside of Air Force One yesterday. He said that he wants China to buy soybeans at least in the amount that they were buying before. He also said that we can lower tariffs on Chinese goods, but China has to do things for us too. So I guess the soybean trade took this as being a positive. I don't know if anything's going to come out of this meeting. China has said very, very little, while the U.S. has been a little bit more vocal about the meeting and the meeting prospects and all that sort of stuff. Bloomberg had a cool chart of the kind of tariff history year to date. You had your big blow up in the tariff spat back in April, and then everything kind of cooled down. But the as far as our crowd is concerned, China still has the tariffs in place on U.S. soybeans, and they have not bought a single bushel to our knowledge, although we haven't seen export sales reports in a couple of weeks, so you never know.
Corn and soybean futures advanced on Friday. The December 25 corn contract edged up nearly 1 cent, settling near 4.23 per bushel. Slow farmer sales and reports of lower than expected yields fueled the gains. Meanwhile, the November 25 soybean contract climbed roughly 9 cents to close near 10.20 per bushel. The rally was driven by continued strong domestic demand and renewed optimism over U.S.-China trade negotiations. Traders, however, remain cautious as the ongoing government shutdown continues to delay key USDA reports.
I was not able to label our charts this morning, but this is a November soybean chart, and this would be the third consecutive day of gains if we could hold these overnight gains here this morning. Overall, still very, very much range bound. You'd probably have to break out above that June high, which is up in the 1070 neighborhood, I think, somewhere in that neighborhood. Get up above there, and we're in business. But until then, this has been very much a range-bound trade. I think the corn market looks a little bit better. We had kind of a short-term downtrend line that we took out last week. That 430 area was kind of a brick wall of resistance back in September. And I think it's because 430 for a lot of farmers may coincide with $4 cash, which is something that's seen as being attractive. We talked with Brian last week about the corn spreads, which have acted very well. That's another thing to be optimistic about.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
I am no longer a commodity broker. I gave up my brokerage license after 20 years, and I had a lot of questions about it. So I figured, why not do a mailbag video? So I had a bunch of questions come in from subscribers. Joe, why did you quit the brokerage business? Can you tell us about the brokerage business? What are the craziest things that happened? I kind of gave my 2 cents on a lot of things, and maybe explained a few things that you guys were not aware of. Jim was on, and we did macro Thursday last week. The Fed is going to ease, and it is a big deal. What does it mean in terms of why it's a big deal? Jim explained this. Jim Urio is one of our regular contributors. He's on every 2 weeks, and he does usually it's Macro Friday with us. He's a professional interest rate trader, has been for 40 years. Super, super sharp dude. He is a fan favorite. You guys should check that out. If you want to see the premium content, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. I know you guys are busy. I know you're in the combine or in the truck, and it's harvest season, but everything that we send out is super easily accessible on your phone. You're going to open the email. You're going to click to play the video, and it's going to play, and that's it. There's no login instructions. It's not messy. It's super easy to do. Give that deal a shot this morning, guys.
Brazilian soybean planting is advancing at a rapid pace. Brazilian farmers have planted about 23% of this season's crop, up substantially from roughly 9% at the same time last year. Planting has been aided by well-distributed rainfall along with warm temperatures. CONAB is projecting this season's crop at 177.7 million metric tons, while the USDA has the crop pegged at 175.
This is a map of the next 14 days, what's expected with regard to precipitation from our friends at Crop Profit. Again, my graphics are limited this morning, but Brazil soybean areas are going to see 73% of their normal rainfall over the next 14 days based on Euro model data. Couple of comments from my friend Drew Lerner at World Weather. He said much of the recent rain was not enough to seriously improve soil moisture, and concern about long-term dryness may continue. Brazil rainfall is expected to become restricted over the coming week to 10 days, leaving the need for greater rain in many crop areas. It is far too early to sound the alarm with regard to any dryness in Brazil, but this is something that we will need to keep an eye on.
Cattle futures closed sharply lower on Friday, following vague comments from President Trump regarding potential measures to lower beef prices. According to Brad Koima of Koima Verilek Trading, beef prices are approaching levels that could cause consumers to reduce purchases. However, when adjusted for inflation, beef prices have remained relatively stable. Koima believes the Trump administration may be considering a trade deal with Brazil to boost beef imports. Meanwhile, Bill Bullard, the CEO of RCAF USA, warned that increasing imports could negatively impact U.S. cattle producers.
And our very own Mackenzie Johnston was not thrilled about the news as well. Was there anything new besides what we talked about on Friday?
No, nothing new. Obviously, social media blew up over this, as it rightfully should. It's a supply and demand driven market. Let it be.
Okay, so there's no news. Are we going to see? I don't know what we're going to see today, but this,
Yeah,
if
who
you're
knows?
a fund and you're long cattle and you see these comments from Trump, you probably take them somewhat seriously, and I think that's what they did.
Yeah, they rightfully should. And like you said, God knows how the market will open up today and how things will play out.
This is a December live cattle chart. We were down what, $6 or something on Friday. Not necessarily great action. Feeder cattle were like not too bad on Friday, right?
No, actually feeders were down the limit across the board except for
Oh,
the
they
front
were.
month.
Okay, no,
Yeah,
my
except for the
bad.
front month contract. And then we're going to have expanded limits today, of course. So, I mean, it could really turn into a bloodbath real fast.
People ask me cattle questions. I'm like, I don't watch cattle. I mean,
So you
I
got me
do, but
around.
yeah, exactly. Outside markets this morning, guys. The S&P is up 17 points. The Dow Jones is up 100. Nasdaq's up 86. Treasury's off just a little bit. Gold's up $55. Crude oil is down 33 cents at 56.82. Have a great week, guys. We'll be back on Tuesday.